Once you learn this candle formation, you're not going to want to take anything else. This is the exact strategy that I teach in my course on AceFX TV, and I'm going to give you a glimpse of it for free here. So stick around to the end of the video so you can see all the markers of all these trades that are going to look repeatable, simple, and they're going to look like copycats of each other, but that's the way it should be because it's that powerful. So if you want to take payouts, stick around to the end of the video and you'll see exactly why this is my best setup. Let's look at the charts here. Looking at the first one, we're going to be trading with the view up, right? So first things first, like I said, this is the course that I'm talking about, the Futures 2.0 on AceFX TV, where if you're not a member, use code Evan. I'll give you 50% off your first month after your first free trial, and you'll learn this exact strategy broken down in a lot more detail. So make sure you go check that out as well. The first setup. This is going to be around the 15-minute opening range on a 1 minute or 2 minute, doesn't really matter. But trading off the New York VWAP, the opening range levels, and most likely a high of day or low of day VWAP. In this case for shorts, low of day VWAP. For longs, a high of day VWAP. So the two candle formation, or whatever you want to call it, is not be chasing the first break outside the opening range, which is this black horizontal level. Not chasing this first breakout. Let it pull back because this isn't often the time it wants to run. Let it pull back, see if sellers can defend this level, because many times it'll break out of one side, buyers step right back in and bring us back to the top. So we don't want to be stuck short at the lowest price of the day for buyers just to rally and stop us out. So see if sellers can defend this level. Once they do, and they show the strength to break us outside the opening range and lower day view up a second time, right? Same prices back here. The second time is when you're ready to go and you want to go continue that trend. Stop loss should be above the previous structure, that lower high that we just formed, that if we're going to hold bearish here, outside the open range low, let's keep on making lower highs. You should be in this to follow the trend lower. Let's take a look at another example. On the same idea the day prior, this is on the 10th on the Monday. This trade was on Tuesday here. The day prior, the exact same thing. Can't make it up. Not chasing this first break outside. See if sellers can defend this New York view up. They didn't get quite up there, but sellers are showing the strength, breaking us back out the second time. That's when I want to be in to go continue this trend that is clearly bearish. Here on the 15 minute, it's clearly bearish. And even here on the 1 minute with these lower highs, I'm definitely looking for shorts. So the whole key so far is just chasing the second break outside when it's more likely ready to go, right? In this instance, if you did short it here, stop loss up here, you would survive. But many times this pullback is big enough that it would stop you out and then fall without you like you wanted in the beginning. So just be patient for that second pump outside the open range low. Let's go to the next one on a long idea. You look back to the left here on the first break outside open range high. Could we buy it up there? Yeah, we get what? 3 points higher. Let it pull back. You could see sellers and buyers defend this New York view up. Who's going to win the battle? Who's going to win it? Are we going to go lower here? Well, buyers defend it. So now that we're holding this New York view up and getting outside the open range high a second time, right? Same price as back here. The first breakout. Take the second break outside. Now that you've had this structure to work with as a stop loss, and you're breaking the high day view up here in purple as well to go continue the trend. And look how much more the second pump outside runs rather than this tiny little baby first one. So show some patience, knowing that it could pull back. You want it to pull back to get not always necessarily a better price, but a safer price that you're not going to get hit with a pullback because you just saw the pullback come in. So you don't have to fear that a pullback may come in and stop you out. Well, you just saw the pullback, so nothing to really fear, right? Let's take a look at another setup here. To the downside, this one you could argue, it's not really an argument. It didn't break outside the open range low yet, but I don't want to be looking for longs today. I'm not going to chase this lower here at the open and chase that momentum. See it pull back. Loving how the sellers defend this level so nicely that buyers couldn't take control. Well, since they couldn't take control, sellers are stepping back in to go continue that bearish trend I have here. Let's get in with the stop loss at structure. And it goes and continues trend. And another point within this markup, if you even look at my price, it runs a little bit, but then what does it do? It pulls back to the open range high, or open range low, excuse me. And the second time it breaks out, that's where the better runner is. So if you sold it over here, rather than where I sold it the first time, you actually do get the bigger move and probably the less stressful move. So I got in a little bit early on this one, just really liking the shorts. But there's plenty of opportunities to short it off that opening range level once sellers are telling you they're defending this level, they want to move lower, buyers can't take control. It's super, super powerful. Once you see it, you're not going to be able to unsee it, and that's going to be all you're looking to take because, I mean, literally, this is on Tuesday. This was on the Monday right before. So far this week, the same trades both days at the open. We went over this one. This one, same thing. Arguably, it's not outside the open range yet, but I know I'm liking short, so rather than chasing these 6 candles down and hoping it just keeps on moving lower, see if buyers can step in. Pull us back a little bit. We defend underneath these 2 key view ups of yesterday's New York in blue In today's New York, the black one, that sellers defend it, and now we're heading back lower again to continue the clear bearish trend that's not shown on here, but the 15-minute was very bearish, now breaking below the yesterday's New York. Let's go continue that trend. So sometimes I'll take it before we've really broken out, but the whole idea is just not chasing price at the bottom. Let it pull back and then look to get on and continue that trend. You don't want to be chasing trend at the end of the move, right? If you go back to this, the worst thing to do would just be sell it here, see it pull back, stop you out, and then it falls without you. Just get in after it's pulled back. It's a lot safer and less likely to have a pullback because it just did pull back. So now you don't need to fear that a pullback might be coming in. So here's that one. Another one that I'll even throw into the mix, which we could argue it's the same thing. Not chasing. First off, this would be the lowest price of the day up until that point. Not chasing that breakout. Does it run a little bit? You could definitely make money in that move. That's fine. Where do we really want to put the stop? Way up here? Maybe. I don't really want to sell it at the lowest price and hope it keeps running. So let it go. Let it go without me. See if we could pull back and sellers defend. What do they exactly do? Well, buyers try to pin us up to the New York. Sellers put it right back down. Still making these lower highs. Here's our break of low a day view up. Second time outside that open range low, right? With clear structure underneath all these view ups of New York. Yesterday's New York is above us as well. All sloping down for shorts. So really, really clean. Maybe slight drawdown on this one, but we're still holding that structure. So never a doubt that we're still falling here, and you get the nice trend continuation, right? So rather than shorting it from here to there, that little distance, if you sell it 20, 30 minutes later, you get a lot bigger of a move, less stressful of a move, better stop loss, better everything, right? So it's very repeatable once you just learn to not chase, let the pullbacks come in, and get in once the next leg of trend is ready to come in. A lot of time, I see that this probably wants to move lower. This first attempt here, I think we're going to go lower here. But how much lower before this bigger pullback comes in? I don't know. So rather than guess and hope this keeps going another 10 points, I'll just react to it moving down another 10, then see the pullback. And then once I'm getting in after the pullback, I'm not fearing that we might not go much lower before this wants to pull back. Why would I think that? We just did pull back. Here's the structure I'm working with now. Let's go ahead and continue the trend again, right? We took a break. Let's just continue what we were doing. Rather than seeing what we're doing of just chasing price and hoping and hoping and hoping it keeps going lower. You'll get lucky here and there, but a lot of times you'll end up selling it at the very bottom, hoping it keeps going lower. Nope, it was out of gas, wants to pull back first. You were right on wanting to sell it, but you got a bad price and at a bad time of day, right? So once you learn this simple strategy, again, I teach it more in depth in Futures 2.0, and I'm going to do an update to it of adding the 15-minute time frame to it as well. But just for anyone that hasn't traded it before, I think these setups speak for themselves. They're repeatable. They happen all the time at the New York Open. If not, we could also find them at 11 o'clock. I mean, many of these markups, where was that short at? This last one's at 11 a.m. So if you missed the Open, you could still definitely find these trades later on. But catching the momentum at the New York Open, super clean. There's more trades over here above my head. That just following the VWAP, following a good price with a great stop loss. It's really, really what's been feeding these payouts and this win streak that I had in November, December, and even a little bit in January. But nice little month we got so far, recovering that tilt day where I did not trade those good setups. But then since then, falling back into what I do best and trading these setups I'm just showing you, right? I took this today, took that yesterday. Well, with that, we're right back up $500 and $1,000. So why would I want to trade anything else when this is what's feeding me and paying me these payouts? So if you guys found value in it, if you needed an account to trade, I'm all with Tradeify right now. All these accounts that you see, if you actually use my name, code Evan, you'll get 30% off. So if you need an account, go scoop one up with the discount. But I appreciate you guys tuning in. Hopefully you guys adopt this strategy and trade with the VWAP. And if you haven't already, tune into the streams and you'll learn how to trade them as well, and we'll make money together. So I appreciate you as always. Trade safe, and I'll see you guys on the charts tomorrow morning.